what is ETF? ETF is also known in the full name, Exchange Traded Fund. So it's a basket of security, it's a basket of investment that normally tracks an underlying index. What are the advantages of this ETF? Okay, first thing is low cost. Average expense ratio of an ETF is generally, most of the time, lower than actively managed unit trust fund. The second advantage is that just one ETF alone, it comprises of many or several securities or investment in an index. Thirdly, accessibility. Compared to unit trust, you can use ETF to access to different kind of market, certain asset class that normally not available for unit trust retail investor. So these are the certain sector which is interest for certain investor, but you can't access it through unit trust, but ETF can help you to access to it. Okay, and flexibility. Okay, ETF can be traded at any time as long as within market hours. On top of that, transparency. You can know everything they hold on the daily basis. So that's why in that case, you know exactly what you invest into. Okay, despite all the advantages, but we need to accept the fact that ETF does not perform well in all markets. The second disadvantage is that, okay, of course, we know that ETF is good that you can buy it like a stock, at any time during the market hours. But this may also give you certain risks that can hurt your investment return. Okay, why? Because it can change your mindset from a long-term or medium-term investor to an active trader. Depending on ETF, it's not always low cost. And of course, diversify different kind of investment doesn't mean that it won't be affected by market ups and downs. Another disadvantages is that investor of ETF have got no say what do this ETF invest in the underlying asset. So let me share with you what factors we need to consider when you invest in ETF. Number one is tracking difference. Tracking difference is the difference between actual ETF performance and the performance of the underlying index. The next factor that we need to consider is expense ratio. Okay, normally expense ratio is expressed in the way of percentage of an ETF average net asset. So it is basically the annual cost the investor like us pay to cover the ETF operating expenses, management fee. Of course, when we select, we want lower expense ratio. Now, the third factor to consider is liquidity. We select the ETF that has got high daily volume and small bid and ask spread. Now, underlying investment asset. Some ETF may contain some risky component, may not be very obvious. Okay, so if you don't conduct a proper research on the ETF that you choose, you could end up investing into certain assets that you are not aware of. The structure is also very important because in unit trust, generally we don't have this problem. But for this ETF, we got the issue of structure, whereby you have got physical ETF and you got synthetic ETF. So physical ETF hold actual underlying security that make up the index. Of course, there may be a separation between full replication, which hold all the stocks under the index, or partial replication. Synthetic ETF normally is designed, created using some derivative to execute investment strategy. And it is for investors seeking to invest into illiquid and hard to access market.